Alright guys, welcome back to another video, and if you're new here, thanks for stopping by. Make sure you hit that subscribe button now, as each of these videos builds upon the previous analysis throughout this entire bull market for the stock markets, Bitcoin, cryptocurrencies, and the real estate cycle. It's your home of macro cycle analysis. As I said, I'm covering Bitcoin, cryptos, the stock markets, and the real estate cycle. Today's video, another big banger, as Bitcoin has dropped 3.5%, hasn't scared out as many people as we would have liked. However, there are some pretty significant signs that are showing up now for the stock market that we haven't seen since the 2008-2009 global financial crisis low. And those signs could be telling us that we've got pretty big moves ahead of us. I know there's been a lot of big moves over the last couple of years, but as we continue in the macro bull market, the 18.6 year cycle, the 14 years up, roughly 4 years down, you're going to continue to see more and more of this crazy volatility up and down, mostly to the upside in the winner's curse phase. It's been going on for over 200 years. No reason to doubt it now. So let's dive in to the analysis. I'm going to start off with OXE, open interest ratios. As I said, things that we haven't seen since the GFC low, global financial crisis. The majority of us here probably don't remember it, or don't remember it because they weren't in the market. Now, if you read up on some of the history, it was one of the big times that the stock markets crashed in the US, in Australia. Australia didn't have as bad of a collapse in real estate prices, which was spurred on by the strong economic growth in China. Maybe things aren't going to be that rosy this time around, but I'll get to that in a moment. The chart takes a look at open interest for options contracts. And as you can see under this dotted line, which is at 0.75, the reading got all the way down to about 0.66 there. We're currently sitting at about 0.7, and this is the lowest that it's been. What that means is that around these periods, there was the least amount of open interest in those contracts. And from history, you can see that at these lower prices, this was one of the best times to be getting into the market. Now, it's not trying to call a low or call a top. The idea here is to show where the momentum will potentially go next. And in terms of the 2008-2009 low here, well, you can see that the momentum went to the upside quite substantially. Of course, the times were slightly different or substantially different. We're not in a major global recession. The housing market isn't falling apart now. That's what the data is suggesting. It's not my opinion here. And yeah, basically we're not at those same times. However, the open interest is showing similar signs, which might suggest over the coming months, we are going to see higher and higher prices on the stock market. As I've said before on the channel, more liquidity coming into the markets, as we're seeing with the money printing. The same thing's happening in China. And what happens to that money? Well, it goes into the markets and it goes into riskier assets. Riskier assets are your Bitcoins, cryptocurrencies, collectibles, artwork, any sort of crap that people think that is going to be worth more in the future. And then you basically continue to ride that wave as long as possible, with several of these indicators coming together. It's not just one thing on its own. However, as I pointed out, this is one of the major ones here that is showing signs of the same reading that it had at the low for the GFC. Now let's have a look at some of the other lows here as well. One of the most recent ones was 2022. That was May, June. This one here is reading in November and December. And then you also had the May, June low as well. So they were the lows that came in for 2022. You had that first low in June. The next low was September, October. And then the reading got even lower as the market began to climb out of those lows. So when the open interest was low, it's been a relatively good time to be getting into the market, because what's happened after that is substantially higher prices. 2022, you can see even some of these lower readings here around 1. Again, that was COVID, substantially higher prices again. And then, of course, the last one here that I looked at was the GFC low. So pretty substantial moves to the upside. Now, the other very interesting piece of analysis when it comes to all-time highs and higher prices for a prolonged period of time, advanced decline. This one's looking at how many stocks are pushing into new, fresh highs, generally speaking 52-week highs. And this was a problem in 22 and 2023, that we had a lot of bearish narratives saying that the markets should collapse, there should be a recession, because we weren't seeing as many stocks reaching new fresh highs. You can see here on this green line, if I zoom into the last few years, this was the breadth, and you didn't see as many stocks moving to new highs. You just had the few. It was the tech stocks, the top 7 that were pushing to fresh highs, and everyone feared that the market didn't have enough stability or enough strength, momentum behind it to push everything. Now we're seeing a lot of stocks going to fresh highs. It's across the board here with a new all-time high on the advanced decline line. That's why I stretched it out to all of these previous years. The point here is that when you see the advanced decline line increase, typically that's the start of another trend, breaking to new fresh highs as well. And that trend is going to continue on for a considerable amount of time. This could be several months, it could be several years. If you've been following the channel, you know my views on the 18-year cycle. It's likely we've got at least several months in it, looking somewhere towards 2026. And you can see in the construction here, basically like the summary, the cumulative advanced decline line takes the daily net number advancing minus declining issues on the New York Stock Exchange and adds it to the previous day's total, or subtracts if there were more declining than advancing stocks. It's commonly used to spot divergences between market breadth and indexes like the S&P 500. So another good one to have a look at as it continues to advance into new fresh highs. I threw this one in for a bit of fun, looking at the history. If October 1st is a negative day, and they're looking at this being a -1%, that would mean that the S&P 500 would have to go from a new all-time high daily close, there's your line chart, a new all-time high daily close, down 1%. It would take it back to roughly 5,700 points. If that was to be the case, then quarter 4 has been a 100% green quarter 4. Just a quick recap of the data here. The 11 times this has happened where October 1st has been a red day by 1% or more. Going back to 1955, so nearly 70 years here, the rest of quarter 4 had ended up 7%, 4%, 13%. You can read all those here. The average, about 10%. So 10% from that closing price there, or the open for October 1st. That would take the S&P 500 up roughly 10% to about 6,300 points by the end of quarter 4. We've got to get through October 1st, so just an interesting one to keep you engaged with the market over the next 24 hours. You're looking for a down day on the S&P 500, -1%. So the price you're looking for the SPX is 5,700 points. We often refer just to the futures contract because it's a bigger traded market there. A lot of volume here on the futures, the E-mini futures contracts. So with that said, let's have a look at the E-mini futures. Yesterday, it closed up at its highest daily close in history yet again. So new all-time highs continue to shine through, and pretty much just builds upon the analysis that we've been looking at through each of the videos over the last several years. Higher and higher prices while the cycle continues up. No signs to suggest that this is about to collapse yet. Basically looking for major swing breakdowns. We turn on our swing indicator, still no major swing breakdowns. Throw it onto the weekly chart, which obviously hasn't changed over the last 24 hours. But yeah, basically no major swing breakdowns here. A really important one there is the yen carry trade low right there. So let's continue to move on. And speaking of Asia, take a look at China. The last 11 days, 7 trading days, China's been up 28.5%, essentially like an altcoin in the last couple of weeks. They've turned on their money printers. It's just beginning. So I think we're going to see further and further upside, some pretty big moves. So that's the short term. Now I want to look at some longer term analysis here for the Chinese market, and just have a look at what happens from these lows. How long can these moves go? This is going to be very interesting and very useful for your portfolios as the cycle continues on. You see higher and higher prices. How much longer can this crap go on for? How much longer can they print money for? How much longer can people expect higher and higher prices? The Chinese data here. So just looking at China itself, 14 months. This is on a monthly chart now, going from the exact low to the exact top. Looking at 2014, there was a peak in 2015. That was about 14 months of higher prices. So without breaking that previous low and without a very significant correction. Now the significant correction came, it was about 46%, if you can see right in there. And we've seen another 40-odd% correction. This time 48.5% to the current low in January of this year, 2024. Let's move on to the next movement here, the next upside. 29 months from that particular low to that top there in 2018. So 29 months, 2.5 years. The next one, we had the start of the trade war in 2019. That was all thanks to Trump and his tariffs and all that sort of jazz. Anyway, from that point, the Chinese market also went on 25 months, so basically 2 years. If we are doing a similar sort of movement here, let's start with the shortest time frame, and we look at 14 or so months. Remember, none of this is exact. You're just trying to look for rough time frames, and you can see the time frame is worked out to be about 1 year, and in these two cases, 2 years, 2.5 years. So let's just take it out to 14 months. From that low would take us out to Q1 of 2025 for this particular move to the upside. Now, if you look at these last two, those had pretty significant corrections in between. So there's still significant volatility without the trend breaking down, getting to that final top there before you can see a pretty significant correction, and then the trend began again. 14 months, let's take it out to 25 months. That would be February 2026. And for 29 months, that would be June 26. So roughly the first half of 2026. If you guys know your cycle, we're looking somewhere towards 2026 for a peak in the cycle, and it doesn't mean that you get this severe collapse. Maybe in the case of China's stock market, you'll see something like this, but in terms of real estate, you never see it just go straight up, straight down. Things have to unwind, like loans becoming bad, and then those getting shot onto the market because people can't afford it, and then you start to see things roll over towards the end. The end is where things get quite fast. So China is now lining up with, well, maybe 2026 when we look at these two last readings here. That leads us on to currencies. The US dollar is hanging on by a thread to the 100 level. Eventually, as I've talked about, this is going to break down, but if it is able to break out of this resistance level, this downwards diagonal slope, it's got a couple of resistance points above, around 101 and then about 101.7 before it can then tackle 102.3. Essentially, I think this is just denying the inevitable and just kicking the can down the road until we're going to see further downside for the US dollar. In the past, we've seen a bearish US dollar be quite bullish for assets like Bitcoin, stock markets, and real estate as well. I don't think this is any sort of hidden secret to people. The main thing that I don't see many talk about is where these moves actually start from, like the big moves themselves. And I broke this down in a tweet last week, just looking at significant support and resistance levels and how Bitcoin responded to those breakdowns or breakouts of key US dollar accumulation or distribution. And I think we're on the verge of another one of those right now. It could take some time, as you're seeing with the US dollar starting to climb up a little bit here, which is maybe part of the reason why Bitcoin has seen that 3.5% fall. I don't think this is enough to crash the price back down to under 50K. If we are to see prices under 60K, I reckon that is, again, another fantastic buying opportunity. Otherwise, somewhere around here at 63K is really only about 5% higher from where that price target could be. And that essentially is the 50% level there for BTC. Now, today is our free crypto and economic report. This is coming out to you guys in your emails, so make sure you are subscribed to this. It is a link in the top of the video description. Get on board with that now, and you'll get this to your emails in less than 12 hours. So that's what we're looking at with the US dollar. It's basically just kicking the can down the road. That's the inevitable thing happening here. When we see this take off, I suspect this sort of crap is going to come back in full force. I posted this nearly 7 months ago in March. This was at the peaks. You always hear this time and time again. And then you have deniers, or I guess believers, in the fact that Bitcoin can make it to $1 million by earlier than 2030 because of the 4-year cycle, and it's going to happen in 2028 or whatever that is. I think, well, I hope in these times where it corrects, you got people that are a little bit more sensible than the old moon boys. At the peaks, this stuff will always happen and it will keep you from taking profits. Be aware of it. I don't need to bang on about it now because I'll have to do that later on, but I'll be called all sorts of names and people try to dissect this stuff and say, well, it is possible. Like they said, well, you forgot about the multiplier and it doesn't take 17 trillion to push the market cap up 17 trillion. That's not the point. The point is just looking at a reference point for how ridiculous some of these targets are, even if you don't actually need the full 17 trillion, which I know. I've been around in Bitcoin for over 7 years now, going back to 2017. So yeah, we're coming into 7 years. Essentially, this stuff is out there at the peaks, and it's a good signal to be aware of towards those peaks. You'll hear Michael Saylor, you hear Kathy Wood. I don't know who else is going to come out of the woodworks towards those peaks, but it's going to be everyone telling us that Bitcoin has to go even further. I think this time around, they're going to have to make their targets even wider. The targets are going to have to be 5 to 10 million to get that belief in there, to get that hopium that things can keep going longer than they are likely to. And we've talked a lot about timeframes in the video. So there's your reminder to hit the subscribe and like the content so you stay up to date with it as we progress throughout the cycle. The Fear and Greed Index had a nice pullback with Bitcoin down 3.5%. It's gone to neutral. Yesterday or the day before we had the greed, and yeah, just basically getting it back to that reset point. Not getting too greedy too quickly is a really good sign coming out of some of these more significant lows. We saw Bitcoin drop into neutral, even just slight fear, and then quickly rise back to greed. Over this time though, it's taken a little bit longer to maintain any sort of sentiment, at least in the neutral zone. So onto Bitcoin and some cryptocurrencies. Yesterday's video, which I'll leave a link to at the end of this one, was a massive recap of the October data and moving forward into Q4 of 2024, basically finishing off the year. Now, one that I didn't go through, but I think it's a nice, interesting one here, and you'll get a brilliant recap of it in today's free crypto and economic report. Remember to subscribe to that, is looking at green Septembers and what that means to Q4. So another important data point to be aware of as we get into October, and then of course Q4 for 2024, when things look like they should go nice and green for the next few months. So Bitcoin short term, as I said, down 3.5%. The 50% level for this shorter term range is at 59,500. So if we are lucky, we might see Bitcoin under 60K for a brief moment. If we're not lucky, well, then maybe we only see Bitcoin back to around 61, 62K. On to Bitcoin and the longer term time frame. What we're looking out for now as we continue on into this cycle, I'm going to focus here on volume. Basically, the breakout moves that there's no guarantees. I'm going to say you can be assured of continued upside. No guarantees, of course, but some pretty good signs that you're going to see further upside. And just taking a look back at previous moves, and take a look at the volume on those price bars when the price breaks out of key resistance levels, like we saw throughout late 22 and then into 2023. October, 12 months ago, last year, October 2023, look at the volume on that entire month and the close. Higher close, increased volume compared to the previous months, and it was able to break out of a 6-month consolidating pattern. It then went on to higher and higher prices, more and more volume came in, and then some of the late buyers continued to buy at the top. Look at that March volume there, the highest volume that you'd seen all the way back since that breakout actually in January of 2023. So you had that highest volume come in at the peak, late buyers came in, a lot of them, and then the next telltale sign on the longer term time frame is that the following month was not able to continue higher. You can see April reversed. There was still a possibility it could go higher, but basically it didn't happen. So it's just telling you that it's becoming less likely that you're going to see higher prices because things are getting worn out. You're starting to see the trend get very worn out. So we're in early stages. The good news is we're in early stages. If we are to see this big volume, either say like October or November, a nice big volume on the monthly chart and a breakout through the tops here, roughly 70, 74K with a continued uptrend. Now there's several other examples of this that you can see throughout the cycle. This one here in March 2023, that was actually the breakout month. That was your banking crisis, the time when we were supposed to get a major recession and the entire economy come collapsing down because they all said that a couple of banks in Silicon Valley was going to destroy the system. Absolutely nonsense. So here we go. Increased volume compared to the previous month. It broke out, and another key signal here is that it closed higher. So the buyers kept the market at a higher price. They weren't willing to see the price drop back underneath the swing top. An important one to note here. To 2020 and 2021, there is November 2020, so nearly 4 years ago to the date. You've got the breakout above all of the highest closes, the swing tops, the monthly tops as well. That one there is through June 2019. And then you had your highest close in history. There is the volume bar, higher than the previous several months as the market was climbing higher. And then, well, we know the rest is history. The market continued higher and continued with that momentum to the next peak. You had the breakout earlier on, higher volume in the last 3 months of consolidation, and the next few months brought you to that next peak, so a few 100% from that point. 2017, huge volume, big breakout, market continued on. There were some pretty extreme emotions. This movement here in July 2017, I remember living through that. A lot of people thought that the market was over here. And then again in September 2017, there was a lot of wild fluctuations within that move. But just looking at this from a longer term time frame, pretty significant breakout on increasing volume. A good sign there for a healthy bull market as it broke out into new all-time high prices. Along with that are the consolidations of this 6 to 8 months like we've looked at before in the videos. But rather than recap that yet again, I'll save that for future videos as we get a little more data coming in. Make sure you hit the like button, subscribe to the channel. I'll see you guys back here at the next video. And don't forget, your free crypto and economic report is coming out today. I'll see you guys back here real soon. Take care and peace out.